Hi all and welcome to TCM Education. In this video we're gonna basically analyze two stocks that were very weak and traded sharply lower yesterday. Let me pinpoint actually the names in front of you because those are the top two losers on our list, on our daily power list of stocks that are either up or down more than 10% based on their intraday range. And you can see that we have AEVA Technologies down overall 24% by the end of the day, and NBIS, that's NBIS, down 9% by the end of the trading day. Both of them exceeded the range of 10%, which is the threshold to get into this list, which is the main list from which we draw trading candidates, but not the only list. So let me emphasize that again and again. It's the main list, but not the only list, because this list takes time to build. And in the morning there are very few stocks. Some are added to the list late in the day when we don't trade anymore. So there is a trade-off between the list, the power of this list, and of course other sources. For example, another list that I'm using, or another screener that I'm using, is a very simple gainers losers list, okay, where the only criteria here is 1 million shares in volume and the price above $10, and it gives me all the movers up and down, the best obviously listed according to their percentage move. And you can see AEVA is on top of that list as well, and if we scroll down we'll find here NBIS as well. But this one doesn't take into account the important number or indicator that we're using in our power list, which is the range percentage. So let's go forward and analyze those stocks and see how they traded. What are the outcome of two potential movers? Let's start with AEVA. So that's the 3-minute chart of AEVA Technologies yesterday. As you can see, it gapped down, started to move lower, and now it's immediately in your watch list. And the question is, what do you do? Where is your entry point? Obviously it's not a long play. I hope everybody understands that. So it's sharply lower, creating a kind of a, let's call it an ugly bear flag, where you don't know where's the entry point. You don't know. The only thing that you know here is that you can use the VWAP as your stop loss. So there is a way to trade this messy chart. On the other hand, being that I was looking at this stock live, it was very spready, spreads like anywhere between 10 and 20 cents. So it's spready, it's after a huge move down, and you're looking for an entry. Most of the time you would look for an entry point that's a round number. So in retrospect, and of course I didn't see it live, in retrospect, if you are trying to enter this 30 level here, and again it's so hard to see, I mean even in retrospect it's hard to see this 30 level. Though it would have led obviously to a successful trade. That's 30, sorry, is it 30? So it's 32, my mistake. It's not 30, it's 32. 32, and then you could have used the 32.50 as stop loss, or the VWAP stop loss, and that makes sense. So there is a way to deal with this trade, but again, even in retrospect, most traders will have a hard time dealing with it. Now, what our other option is to trade this stock. Is to take bigger risks. Instead of taking a 1% risk, go for 2 or 3% risk if it's worth it. So in retrospect, it was worth it. Normally, a disciplined trader will say, okay, the stock is looking great for more downside, but it doesn't fit my strategy. I'm going to look elsewhere. And that's also a valid point of view, actually very valid, because you have, other than EVA like 6,000 additional stock that you can search from. So indeed, it's the worst performer in the New York Stock Exchange and Nasdaq combined in the morning with the price above $10. And you want to be in the business of shorting the worst performer. Again, there are no guarantees that the worst performer will continue lower once you enter the trade. That's never a guarantee. Anyway, that's the tale of this stock, because once it's breaking this consolidation, it drops down another $4 or $5 at one point, which is amazing. That's 20% intraday, an additional 20% intraday, and then reverses back to the VWAP. And then there is another thing with this stock and the VWAP. If you observe it quite, and again, you need to observe it, you see that the stock is not moving above the VWAP. In this case, the VWAP is the 29 round number pretty much. So there is another way, maybe, again, you need to observe it, and it's not very easy to short it at 29 or 28.70 and use the 29 as the stop loss here above this VWAP, and take a small position on the downside. I have to say that the big trade was obviously the morning trade, and then there are, you know, scalp plays, intraday plays, but not necessarily something that you can or develop.
Want to stop guessing and start trading like a pro? Join our one-on-one mentorship program. Learn high-impact, low-risk chart patterns, risk management, and experience with live execution. Get expert coaching and one-on-one training and support. Get your day trading green with strategies that work. Sign up today. Spots are limited. Email thechartsmaverick@gmail.com.
Develops into a good trade, and again, there are no guarantees. This trade carries though very little risk. So if you observe the VWAP reversal short, okay, this move here is about $1, actually more than $1. So there is some potential in this move. Obviously, if you're waiting for the big move down to the lows, you end up with no winner. So it comes back basically to the entry level, and this support level holds until the close of the trading day. So again, in retrospect, a great pick. The delivery of the trade is complicated and a bit risky, and the stock is spready. Of course, you don't know it looking at the chart right now, but if you look at live, you understand what I was talking about. Again, the volume is amazing, everything is fine, so it's definitely a trading candidate. Performing this trade is challenging. Okay, let's move to the other stock, NBIS. And now because I didn't want to spend time drawing the entries on the chart, take a look at the difference. The same scenario, a move down, a bear flag formation. In this case, however, the bear flag is based at 53, which is a round number. It's been tested for more than, let's say, 9:30 to 10:30. So more than an hour. Here the stock is banging on the door trying to break 53. That's a different story than the EEVA trade. In this case, you have a short under 53. You have a clear stop loss, 53 cents, which is the 1% threshold. Let's say you don't have the 1% threshold and you have less, even better. If you have more, you have to decide if you want to take this trade. But at least it has one part of the equation perfect, the entry point. Sometimes the stop loss is not very clear, but the entry point is clear. You can decide based on the entry point to take the trade. Okay, but in this case you have both the reversal higher, both the breakdown, and the result, it dives from 53 to below 50. That's $3 move. That's 8% here. Is it? Sorry, it's 6%. My mistake. 6% risking 1%. And then it reverses, closes down near the lows of the day. But I think this move here is the winning. I mean, if you're in this NBIS trade short and you deliver $3 on this move, percentage-wise it's 6. You can easily cover 2/3 of this move, or use our strategy, which is to wait for either the end of the trading day or for a clear resistance level, and it comes. And now if you look back at the chart from the lows to the 5160, and the stock never breaches 5160. Let me draw it for you guys. Take a look. So perfect technicalities on this stock. Now, can you add on the breakdown on this consolidation, risking in this case additional 30 cents? Yes, you can take it as a standalone trade, ignoring what you already did here. Whether you are or you are not in the position, this is the stop loss now, 51.62. And now if you manage to enter another position to take another 2% here, then this trade basically you're killing on this NBIS trade using 2 entries. One where you risk 50 cents, which is a full 1%. One where you risk 30 cents, which is 2/3 of 1%. And the results on both entries is amazing. And again, why are you watching? It's on both. It's everywhere. This stock is very weak. It has a clear downtrend. You're taking super easy trades in terms of clear entry points and clear stop losses. The stock is obviously also in the daily power list if you have such a list. If not, you have screeners. It's in that losing screens. It's a $50 stock, so it can move a lot. I don't think there is any problem delivering the volume overall. What is the volume overall? Over 5 million shares. Otherwise, it wouldn't make it to the list anyway. So this is 2 trades based on the daily power list that basically look the same. One fit the criteria, the other one did not fit the criteria. And now let me show you another trade in a minute, in a second actually. Okay guys, let's take a look at IREN. Let's call this stock IREN. So IREN is a stock that we never follow. Look, it's an unimportant stock. I think it below its profile is, let me see, engage in operating institutional grade data centers powered by renewable energy. Whatever that means, I don't know, but that's IREN. So the reason IREN is being analyzed here right now is that we can really show how the stock gets into the daily power list. So basically IREN starts with a big gap down and suddenly turns around. This move from 14 to 1550 is basically 10% of the range of the stock. So let's round things up. The stock is $14, so $1.4 is 10%. So once it moves from the lows to the highs, $1.4, it already exceeds the range of 10%, and this is how it gets into our list. Okay, so that's very simple. From the highs to the lows, more than 10% of the value of the stock at the beginning of the trading day, and this is how IREN gets into the list. Now what happens with IREN is that basically it moves higher, it's very choppy, then turns around, and then creates a base, guess what, at 15. And if you look carefully, and again you need to look carefully and analyze, you see this support level here at 15, including 5 cents below, and then the stock moves to 1560 and back to 15 and close it at 1520. So if you want to take IREN and you miss, of course, because you never watch, nobody's watching IREN, you miss on this initial move higher, and there was absolutely no reason to look at it, really. Why would you look at IREN? There are so many other better movers. So that is the only place you could have basically taken IREN from this reversal play. Okay guys, thanks a lot for being here with this video. We'll post more during the day. Do share it with your trading friends, and we'll see you in our next one.